Hello and welcome to yet another episode of Crystal Ball Election Special. As you've been seeing over the last few weeks, we have started the countdown to the elections. The market started pricing in to a certain extent already the election verdict, and it's been a very strong, fairly widespread kind of rally pumped by some serious flows from global investors. Where will the market be on the eve of 16th of May and beyond that? My guest today on the show is Madhu Kela of Reliance Capital. Madhu, good to see you after a long time. How have you read this run-up to the elections, and what part of the election verdict is in the price already, you would say?
I would say, I think market is certainly in a better mood as compared with what we have been for so many years. The breadth of the market has increased, and we are seeing some participation in the sectors which didn't participate for a long period of time. But I would say, if what the opinion polls are saying, if that were to be believed, and if there is a real stable government which gets like 240, 250 plus seats, and one can bank on this government that is going to be around for 5 years, then I do not think that what all could happen in India is priced in. I think there will still be a long way to go.
I mean, you're in a good position to gauge local participation as well, Madhu. In the last few weeks, since the market took out its previous top, have you seen participation come back to an extent, or are people still saying we'll rather watch the election verdict and then take that plunge?
I think the smart money, Udayan, maybe the high net worth individuals have started to participate a little bit, but it's still a long way to go. You look at, we have had 1,20,000 crore rupees of redemptions from mutual funds and insurance companies from April of 2010 till maybe December of last year. I don't have the updated number for last 2-3 months. But I'm just saying, if you have had, but in this period also people saved money, and that money got diverted to gold, where people have made no money. It got diverted to fixed income investment, which has barely been able to hedge the inflation, and it has got invested in property where people have not made money. So people have kept selling equities for last 3-4 years and have kept invested in these other asset classes which are now not doing well and have become rather illiquid. So as we have seen in the past, once market starts to run and people get this feeling that we are left away, I think the participation could be of a very different nature and the size. And that's certainly not there. I think it's small money trickling in from here and there. And whatever we see the rise, even in the B group stocks, if you really analyze it deeply, except the top 15, 20 liquid names, a lot of the stock price rise is on very, very thin delivery volume. So it's not actually reflecting any huge participation from any class of investors.
You said that maybe the market has not fully priced in the election event. If indeed the opinion polls are correct, then post the election verdict, how much more upside would you give the Nifty and also the rupee versus the dollar, which has also started pricing in this outcome?
Let me just take you back a little bit, Udayan. Basically, we have had a 5 year of very sluggish market environment where the index broadly has remained where it is at 2008 levels. Now it is just broken down up by 1,000 points, or 1,500 points barely. But if we just see the bipolarity in the market, then only we'll be able to understand how much more could you go. This index, one index which is IT, Pharma, FMCG, maybe that index is at 50,000. And the other index by definition will be at 12,500, 13,000. So and this index was substantially higher in 2008. So there has been a huge correction of maybe 50, 60, 70% in the index as a whole. So when we say that we have a stable government, what are we expecting? We are expecting that there will be a confidence in the mood of industrialists and investors to come and participate, specifically the local people. And as I said, there is so much outflow which has happened. So a lot of money could pour into these sectors which have been really underperforming for last 5 years, and a little bit of impetus from the government and policy forthcoming could actually, completely change the sentiment. And I think just to give credit to this government, I think a lot of work has actually happened in the last 6-9 months, and partially market is even reflecting that mood. So I would say that, if you have a decisive government at the center, which is proactive to economy and to markets, there is still a long way. Something fell from 100 rupees to 10 rupees, and it has gone from 10 rupees to 15 rupees. You don't say that, it has gone up 50% to it is fully priced.
Let me play devil's advocate, Madhu, and ask you, or rephrase the question slightly differently. Over the last few weeks, if you have conversations with global investors, they will point out that India is actually doing much better in a relative sense compared to its emerging markets. They talk about current account deficit, CPI coming down, the rupee has cooled down. Now, all of this is happening not by the next government which the market's talking about, but by the current government. So why should the market start to rally and see significant jump in valuations if this government changes into a new government which is an unknown quantity?
I'm just saying, that is the nature of the market. Then the fact of the matter is that there was a lot of value, which is what, at least for once I can say that, when we discussed last time in your investor meet in August, one had the guts to thumb the table and say that for a long-term investor, maybe this is the right time. So market always needs an excuse to go up, and you can, after it starts going up, we can start attributing reasons why it has gone up. The reasons could be anything. The fact of the matter is there was virtually no participation from the people, and little bit change in the mood has caused this rally, and this has also got supported hugely, let's not forget, by the calm international sentiment. Basically, so much money got printed in the world in the last 3-4 years. Part of the money has come, and because India is doing well, more and more investors who are underweight India are compelled to look at India and start to participate. So the nature of buying which I hear is all basket buying from sovereign funds who are saying that buy me $100 million in India. So which is why you are seeing that the whole mood change is not only attributed only to this upcoming new government, but also partially because the valuations were by in our side, and partially because international investors, because of the problems in other emerging markets, especially of late problems in Russia, the ongoing problems in Brazil, the problems in China, have found India to be relatively safer given circumstances, and the FII money has poured in. Now, as you said, being a devil's advocate. Now, conversely, if you do not have a stable and a good perceived government vis-a-vis market in the economy, then, I would not be surprised that this whole sentiment will turn again, and it could again become negative. So market is certainly hoping in the last 2-3 months that we will have a more stable, proactive, market forward-looking government at the center over the next 5 years.
What would constitute forward-looking, Madhu, is my next question to you, because we've seen this kind of market movements hinging around election verdicts in the past, and they've not always been the most sanguine over a period of time. You'll recall yourself, the last UPA government was met with a 18% rally in the index over just 2 days, only to be followed by 3-4 years of utter frustration. So what will convince the market this time that despite its favored government coming to power on the 16th of May, we are not going to walk down the same path as we did 4 or 5 years back?
So, Udayan, the first and the foremost thing are the absolute numbers. So there is a difference between what you can do when you have 210 seats and what you can do when you have 250 or 260 seats. So that will be the first and most important thing. The other thing is that, because as you and I know, there is so much money floating around in the world, which is not even being able to park that 1% interest rate. In countries like Germany, interest rates are still running mere at 0 or -2%. Even in the US, interest rates are absolutely at decimal level. So any person who comes at the center and who can give a strong confidence to international investors that we mean business, will fix up all our small issues. Let's something like GST, which has been pending for 5 years. If we assume that after the formation of the government, even in the next 6 or 12 months, that will get implemented, Now, a lot of experts have come and attributed that that can contribute minimum 1.5% to the economy. So the things which have been pending, as I said, a lot of what was pending has also got done in the last 6-9 months, which is why you see the mood of the market where it is today. So market is hoping that the new government which comes in will finish off whatever is unfinished in terms of the agenda and will be able to take few steps which will lead the investors, by and large, whether it is a local or a foreign investors, to believe that we are in the right path. And that sentiment change, given the global markets and given global liquidity, I'll not be surprised that even we attract a lot of FDI flows, we attract a lot of debt flows. As you have seen in the last 3 months, little bit of sentiment change, and we attracted like 35,000 crore rupees of debt inflow.
At this point, a quick break. We return with Crystal Ball Election Special in just a minute.